everybody, welcome back to my YouTube channel. If you are new here, then welcome. My name is Rachel and I am a disruptor in the accounting industry. So I'm disrupting what it means to be an accountant, what it feels like to have an accountant, and disrupting the concept that you can't scale a business to 7 figures without losing yourself. I create long and short form content across YouTube, TikTok, and Instagram, and so I would love to see you there, where I share daily behind the scenes content of what it's like to scale a business. You can use the links in the description of this video to find me everywhere that you consume content. In today's video, we're talking all about the essential deadlines every limited company director must know, where I'm going to be running you through your annual accounts and company tax return deadlines, what these deadlines look like in your first year of trading, as well as PAYE and VAT registration deadlines too. So as a director of a limited company, you are responsible for ensuring that your company meets all of its filing and record keeping obligations. This is the case even if you have an accountant who prepares and submits your accounts and tax returns for you. So by understanding your company's filing and record keeping requirements, you can ensure that everything is in order and avoid any potential fines or penalties. Now there's plenty to get through, so strap in and let me hold your hand as we go through every single one in turn. So first up, a limited company must submit a set of annual accounts to Companies House every single year. Your company's accounts outline the business's activity over the last 12 months and will contain your balance sheet, profit and loss, and cash flow statements. It will also include any additional notes that are required that your accountant will help you with. Any accounts must be submitted to Companies House no later than 9 months following the end of your financial year. However, your deadlines are different when you've just set up your limited company, and this is because your first accounts usually cover more than 12 months. But why? Your first set of accounts will start on the day your company was set up, otherwise referred to as incorporated, and end on the accounting reference date that Companies House sets for the end of your company's financial year. This is the last day of the month that your company was set up, plus a year. By way of example, let's say your company was set up on the 24th of August, 2023. Its accounting reference date will be the 31st of August, 2024, and so your company's first set of accounts will cover 12 months and 1 week. In the following years, your accounts will normally cover your company's financial year, which will then run from the 1st of September to the 31st of August every single year. The first annual accounts to send to Companies House must be submitted 21 months after your incorporation date. So next up, let's talk about tax returns. A company's tax return is a report which is produced by you or your accountant that outlines how much corporation tax you need to pay. So you need to register for corporation tax with HMRC within 3 months of the date in which you started trading through your limited company. Then you need to pay any corporation tax that you owe to HMRC before 9 months and 1 day after your accounting period ends. Your accounting period for corporation tax is the time covered by your company tax return and is normally the same 12-month period as the company's financial year, which we've just covered for your annual accounts. You need to prepare and file your company tax return itself within 12 months of the end of your accounting period. So let's talk about that first tax return again. Under any circumstances, the period covered by your tax return can't be longer than 12 months or 365 days. So you might have to file 2 tax returns to cover the period of your first set of accounts, which, as we've already spoken about, can be longer than 12 months. If you do, you'll then have 2 payment deadlines to remember and 2 tax returns to file. But in following years, you will then normally just be filing 1 simple tax return, and it will usually cover the same financial year as your accounts. Your third statutory obligation as a limited company director is to submit your confirmation statement. This is an annual filing obligation for all active limited companies, and it's used to confirm whether the information held at Companies House about your company is up to date. The best way to explain the filing deadlines for a confirmation statement is probably by way of an example. So let's say you register a company on the 1st of June 2023. The statement date is then set as the 31st of May 2024. And this is the date that your first confirmation statement should report up to, the period which runs from the 1st of June 2023 to the 31st of May 2024. This will then be known as the review period. You'll then be asked to file a confirmation statement no later than the 14th of June 2024, which is 14 days after the review period ends. Beyond the 3 statutory obligations that we've just run through, what else might you need to know? So first up is PAYE. If you plan to employ members of staff and pay them a salary or pay yourself a salary as a director of the company, you'll need to sign up to PAYE. You must register even if you're the only employing yourself, for example, as the director of the company. You must register before the first planned payday, and please bear in mind it can take up to 15 working days to get your employer PAYE reference number, which we need to file your payroll. And then there's VAT. So you must register for VAT if your total VAT taxable turnover for the last 12 months was over £85,000, or if you expect your turnover to go over £85,000 in the next 30 days. If you exceeded the threshold in the last 12 months, you need to register within 30 days of the end of the month that you went over the threshold. Your effective date of registration will be the first day of the second month after you went over the threshold, and if you're going to exceed the threshold in the next 30 days, you'd need to register by the end of that 30-day period. Your effective date of registration is the date you realised, not the date your turnover went over the threshold. Make sure to take note of the deadlines we've run through today, because failure to meet these deadlines can result in some pretty hefty fines. But that's a wrap for today. And so today we've covered all of the deadlines that you need to know about as a limited company director. Please do let me know in the comment section what you found the most helpful. Thank you so much for spending some time with me today, and I hope to see you again very soon.